morning, everyone. Welcome to Mark Putrino's Trading Research. Good morning, Mark. How are you, buddy?
Hey, I'm good. How are you?
Excellent, excellent. I'm wondering how this scheduling of where they put these NFL games on Thursday night in Europe, because now you've got the Dolphins and the Chiefs played yesterday. They're getting on a plane to fly to England today or wherever. I think England or Germany. I can't remember where they're playing. And then they got to play again on Thursday. That's a little harsh, man.
Yeah, well, they're all young.
I mean, they get paid a lot of money, but it makes the game fall down, I would think. Anyway, we got to beat the Chiefs.
Yeah, now they're having games in Germany now too.
Yeah, I know.
It's crazy. It's like it's our sport, man. We should just keep it. Let them play their soccer. Speaking of sports, man, I was watching the rugby championship yesterday, and I just have no idea what the hell is going on. I mean, do you know the rules of rugby? I mean, it is a confusing
No, it
game.
just looks like a brutal beatdown. It looks like a big giant scrum. I think they call it a scrum, and they've got to push the ball forward. I don't think that they can. I think when they pass it, they have to pass it behind them and then move the ball forward. And then I'm not exactly sure with a whole lot of it, but I know that the only way they score is by either running it into the end zone or kicking it through that very narrow goalpost from however far and whenever they want to kick it. So I'm not sure.
Yeah, like there's this one play where they're inbounding the ball and like two of the other guys pick up a guy like literally up to and he stands on their shoulders so he can like catch the ball.
Yeah.
Yeah. Then when they were like taking the ball in from the sidelines, there's like one where like the guys go and they like lean on the other guys. It's pretty bizarre. Anyway, you guys see this Matthew Perry died?
Yeah,
I mean, he had a problem. He had a big drug problem, so I presume it has something to do with that. But I will say this, dude, that show Friends sucks. You know, if I watch it, I can't even tell. If there was no laugh track, I wouldn't even be able to tell what the jokes were.
Right, because it's all just one-liners put together. And really bad.
And this actually teaches us a lesson about herd mentality, right? Because I remember this very, very well because I was in New York City back in the 80s where Seinfeld was like this hit show, right? And everybody watched Seinfeld. I mean, everyone did. And then all of a sudden it was like, oh, the new hit show, all the critics are raving about Friends, how great it is, blah, blah, blah. And then Seinfeld went off, and then all of a sudden out of nowhere, Friends was there, and people just accepted it as like, oh, this is the great new show. But it's terrible.
You're right. I saw that.
But anyway, that doesn't mean I still feel sorry for the dude, but he was pretty lucky. Now, when I worked in Radio City Music Hall one time, him and I forget one of the girls, not Jennifer Aniston or I forget what her name is, the blonde hair one with like kind of the weird nose. Like they were outside of Radio City Hall, and he was wearing a tuxedo and she was wearing like some real dress, and they were literally just standing there. They were standing, like he had his arm on her arm. They were just standing there, like looking around. And there were thousands and thousands and thousands of people, like, just watching them. It was so friggin' bizarre. All right. Anyway, what's up, Mr. Steven? Market. What's going on in the market? I don't know. It was up a little bit. But let's see here. Yeah, so I mean we're up a little bit, but considering the move that we've had down, this is not a big. All right, now you see this 416 level. All right, so this is the S&P, and we're oversold, so it's not surprised we're getting a little bit of a bounce here. But now you see this 416 level. We have to watch now to see if there is going to be resistance at this price level because it was an important price level.
Right.
It was resistance here, and then, well, I mean, we kind of just blew right through it, but my suspicion is that if we rally, we're going to hit some resistance there, but I think we're probably going to continue to go lower. Yeah, I hate Friends, man. It's such a dumb show. And I've tried to watch it, I will say. But anyway, we know that trading is about knowing where our price levels are. So I'm going to be looking for 16. So we're 413, so it's only a couple points away. And then we'll go through our sectors here, our technology sector. Yeah, now look at where this is kind of teetering on support here. So this is 160, 150. So we're still kind of, you see this here, support there, and that's pretty much where we were on Friday. Yeah. Now, a lot of times when you get to support, it looks like the support's breaking and it takes a day or two to kind of stabilize. And that's because people are selling out of fear. So fear is a more powerful emotion than hope. People buy from hope. So that's why bottoms tend to be more volatile than tops are. So anyway, coming back a little bit this morning, but not really enough for me to think that the trend has changed. And I'd be looking for resistance right up around here, this 164 level. So let's move that over there. Remember, the market is it's 11 different sectors. All right. So different sectors are in the driver's seat at different times. And this is the sectors right here. So utilities, materials, real estate, all about 2.5%. These don't really affect the market because they're just really small. Energy, though, even though it's only 4.6%, can influence the rest of the market, because generally when energy is going up, it's bearish for everything else. Consumer staples is 6.6%. Sometimes we get clues there because money might start flowing into this sector right before we get a sell-off. That's what we call the flight to safety, right? So these are the stocks that are considered to be safer. So different sectors are in the driver's seat at different times. And I think now it's all about the financials, which we will look at as soon as we're done looking at healthcare. Wow, look at that. Big sell-off there. But now we're rebounding a little bit. Where are we this morning? Look at that. So we're right. So this line is 123.76. I'm going to make it 123.80. And look where, look where we are this morning. So it's not a coincidence that we get this rebound and we run into resistance at the level that had been support.
It's pretty incredible.
What's that?
That it does this all the time. I mean, it's I mean, the more that I've done, the longer that I've sat here with you and the more this happens, it's just, I mean, really, honestly, if you could learn the price levels and you could watch the stock, whoever's got the best momentum for the day, you could pick and choose how and when you make money in the stock market.
Well, the key is when you have real money on the line, being able to control your emotions.
Right. Well, and you get that with time.
Yeah, with time, you get confidence. All right, so financials have been really beaten up pretty bad. And they're not really doing much this morning coming back, but look at that. And here we have our examples here of what was support turns into resistance. What was support turns into resistance. So now we'll have to see if this support here becomes resistance again. And there's a good chance it will, because look at where we opened on Friday, right on this line here. So this is, I guess this is 32. Yeah, so $32.
I'm going to let Mark answer that question, Di.
What is the primary focus? Well, it's really about the market, Di. It's about everything. It's because if we talk about options, stocks, bonds, we see the same principles in them all because it's human psychology that's doing it. So we could look at a chart. Charts are graphical illustrations of human psychology. So you see here how we got resistance becomes resistance, then it becomes support, then it becomes resistance again. So this is an ETF. We could look at, just say, a future, like we could look at crude oil, for example, and we're going to see the same type of things here. See resistance becomes support, so forth and so on. So it's about the most important thing in the market is understanding the trends, or the levels, the trends, the momentum, and the psychology. So that's what the course is really going to be. It's going to be like a live thing too, where we'd have a live stream, because it's easy to go like read a book and be like, oh yeah, well, this person said that last December this was going to happen and it did, and blah blah blah. But you're not really learning it in real time. The market acts differently at different times. So if you're not actually like involved in the market like every day, at least until you learn. I mean, maybe once you learn a strategy, you don't really need to be that focused. That it doesn't require that much attention, but once you come up with a model. But yeah, so we're going to cover everything. I mean, we're going to talk a lot about options because I know that there's a big interest in options. But ultimately, in options, what do you have to do? You got to figure out which way the market is going to go on whatever you're buying your option on. And how do you do that? Well, by understanding where the important price levels are, what the trends are. Something gets overbought and it gets to resistance. Well, then you start looking at put options. You know what I mean? And different people have different styles. Some people like to buy things that are out of the money. Some people like to buy things that are in the money. Some people like to buy options that go far out. Some people like to. Whenever I used to trade options, I was always very short term because I'm looking at, I'm not making a call where the market's going to be in 6 months. I'm making a call where is it going to be in a week or in 2 or 3 days. So, like for instance, something like this kind of gets my interest here because, well, this is kind of a weird thing because of what's going on over there in Israel. Because I mean, all hell could break out at any given moment if they attack Iran.
Right.
And but typically this would be a kind of a bearish pattern there, right? You got your lower high, and you got your support. So this, I'm surprised oil has hung around this level for as long as it has, but I think that this is going to make a break somewhere because we're at a pretty critical price level here. See, going back to last October, every time we've gotten there, we've made a rapid move away from it. Right. So now the question is, all right, well, we think that there's going to be a move in oil. Do you trade it by buying a future? Do you buy an ETF? Do you buy an option on the ETF? Do you buy a stock? There's a lot of different ways to get exposure to it, and different people have different strategies. Some people like to buy ETFs. Some people don't like to buy options. I think people should consider buying options, but some people just don't like to buy options. Some people focus on just a couple particular stocks. Some people are wide open to trading anything, so forth and so on. So we should hopefully have those done soon.
Yeah, well, it's going out on Wednesday on the 1st. I'll have a link that I'll put in the chat here. And for anybody that's been with us for the beginning, there'll be a rate for you guys for the first 60 days that belongs to you for perpetual fashion, however long you stay with us.
Perpetuity.
Perpetuity. There you go. And then after that, in January, it'll change. And then we'll have the courses laid out individually priced. The options will be free to begin with. Do you have that, Mark, where you can show it and let them see how much options information is in there?
Maybe. Let's see here. Courses. It's a lot.
It's long terminology. So all of these are included in it. And whenever you get the membership, you have access to every one of these courses that's in here. Some of them are longer than others, but this is the videos and PDFs that go along with the options lessons now. So this is what you're going to be given free on Wednesday. This will go out, and it's going to have videos and PDFs that go along with it. And so the basic goal of this is for you guys to get a basic understanding of options, and then you do your own research. We're not looking to try to grab drones out of the world here. We want people that are interested in learning how to trade stocks and taking hold of their financial future. And this is the way to do it. I'm telling you now. No, it's not just options, but in the market period and in learning about your financial freedom and how to get it. And Mark's going to teach us how to do this with the stocks. The options is awesome. And I think it took me a long time to go through these things and proofread them all, but they're all really good. So I hope you guys enjoy it. And what I'm going to do, Avi, is I will put a link in the chat on Wednesday morning, and then it'll be to a landing page that you guys will put your email in, and it'll say that you want it. And then it should take you right to the link to grab the course. And then you'll download it, or you'll have access directly to the course on the platform. Because we have a specific platform that'll be in the website, and it's under courses at stock market or courses.stockmarketjobber.com. So you'll actually go to the website to find the courses, and then it'll link over to the platform that we use to be able to build out the lessons and then your quizzes to help you kind of keep the knowledge, solid.
I just noticed I got to put in the PDF for reading quotes.
Yeah.
But yeah. So we cover all the basic stuff, right? Valuations. I don't know if this is necessarily the best order for them to be in, but I guess there's not really an order. But strategies. We talk about call spreads, put spreads. I mean, nothing like super duper complicated. I mean, you hear like an iron condor, that might sound complicated, but within I could explain it to you in 10 minutes what it is. And straddles and strangles, these are really good strategies. These are, if you think the market's going to move one way or the other, but you're not sure which, you can consider buying a straddle or a strangle. And that's when you buy a put and a call of this on the same security. And the idea is that you're going to lose money on one, but you're going to make money on the other.
So we're going to go through the platform over the next couple of days and get everything proofed, make sure we've got the quizzes, everything in there, everything lined up. And then we're just trying to make sure that we've got everything right before we launch it. And that's why we know that the options course is perfect. So we're going to go ahead and put that out. And Alba, I see your little down smiley face there. We're going to see if we can, I think I have your email address. I'm not sure. I believe we do. And so everybody that sent their email address, I'm going to try to send it out in the link, but I'm also going to post it here in the chat. And that way you have it as well.
Boy, I'll tell you, I went into the city on Friday night, dude.
Yeah. Oh, that's right. You went to the Pitbull concert.
Well, my daughters did.
They had a good time?
Yeah, they did. But, dude, it was awesome. Crazy. It is just so nasty down there now. I literally almost tripped over this homeless guy who was sleeping on the sidewalk. It's just so different than when I worked down there. It's just see just homeless people everywhere. Then there's these anti-Israel protests, like in Madison or Grand Central Station. Grand Central Station was like so packed you couldn't like get your way through. I was like literally pushing people out of the way because I was with my two daughters.
Yeah.
But yeah, it was. It's a shame, man. It's a shame. It's really a shame what they've let happen to that once great city.
Well, I just hope that voters will stop voting with their conscience and start voting with their what they actually see and what they know, what they actually know. I mean, you really can't turn a blind eye to these things that these people do anymore. You have to. I mean, that's where like we've been talking for a long time now. It's going to go from one extreme to the other to where it's going to be lockdown conservative versus this wide open whatever, just for us to get back to the mean of a normal society.
Yeah, I mean, it was crazy. I mean, I've spent a lot of time in New York, and I never saw Grand Central like that.
Man, I love New York, and I wouldn't go. My buddies that live in Jersey are like, man, it's so nasty now.
If I never go to New York City again, it will not bother me. So anyway,
that's all right. Shame, anyway,
Mark. What's that?
That's a shame.
Yeah, well, that's what you get. I mean, they're being overrun with, it's the bail thing. The cops don't want to enforce the laws because they don't get backed up.
Listen, it's part of the reason why I retired is because this border is so wide open. If you've got all these people coming across the border and then you're going to expect me to be responsible to make sure that person shows back up to court, but you can't even tell me what his name is, but you're going to arrest him and know that he can be arrested for a crime here, but he can just be released. I'm not going to be responsible for that. So if I had stayed in business, I would have gone completely out of business by losing all my money, chasing people down and getting hurt. And it's just not worth it anymore.
Yeah, it's a shame, man.
They ruined us. Well, for now, we'll get it right again. We're resilient, I think, Hopefully.
See Gavin Newsom.
Why did he do that? He tried to boar hog a little kid? Was that a Chinese kid?
Yeah, obviously he's trying to
boar hog a little Chinese kid. Man, that ain't right, Gavin.
I could just blown his presidential aspirations right there.
Are you kidding me? He's over there kissing up to Z or whatever you say.
Anyway, all right, this is a good example here of an important price level. So look back here. So this is one. Let's see what this is. This is our XLY. This is our consumer discretionary. So 149.30 is what this black line is. So notice how what was resistance turns into support. So this sell-off didn't just end by coincidence right down around here. It ended around here because this was a resistance level. And and sometimes people sell, and when the price goes higher, they tell themselves, I made a mistake. I'm going to buy my shares back if I can get them at the same price I sold them at. Like right here, see? So what was resistance here turned into support over here. So resistance becomes support. Even here, resistance here became support over here. So for whatever particular reason, the market likes this level, this ETF. It doesn't like 151 or 152, at least not from this time horizon. It likes this 149, let's call it 149 and a half, 149.50. Yeah, so it's not a coincidence that this is where the sell-off ended, right? And it's not a coincidence that this is where the rally ended, because it's a former support level. So this is our consumer discretionary sector. And Tesla and Amazon are the biggest guys here. Yeah, so like now sometimes it takes a few days or maybe a week or two for the support to break, but it looks to me like this support is breaking here. See, see how we're kind of slowly working our way lower. Right? So slowly, what was support looks like now it's kind of is turning into resistance. So this Tesla could have a pretty rapid move lower and a pretty sizable move lower too. I don't see any like what'll probably be obvious support until we get down to around 166, and it's trading at 210. So that's a pretty darn big move there. All right, let's take a look at Amazon. So Amazon had a little bit of news and it came all the way back, right? So but I would say now it's looking kind of neutral. So I would say the market to me looks short term, looks pretty, I would say neutral to slightly bullish short term. But I don't think this is gonna stick. And I think that there's just too much messed up stuff going on. I mean, they do say the market climbs a wall of worries. But interest rates are still high, right?
That's a pretty defined range right there as well.
What gets me is that they say that there's been 32 attacks. The Iranians have attacked the United States bases 32 times over the last whatever time period.
Yeah.
And at the same time, we're negotiating them, giving them money and giving them freeing hostages at the same time that they're attacking us.
Well, we don't negotiate with terrorists. We just fund them.
Yeah.
The ignorance of that, though. I want you to think about that, Mark. We went to war for the Lusitania. One ship getting sank with Americans on it. We went to war for a lot of different other things. Now you've got 32 are dead. You've got others that are hostages, and all this slap. And you've got these soldiers that are sitting in these bases out in Syria and Iraq, and they're doing nothing, and they're just having bombs lobbed on them. So they go over there and they blow up a couple of ammo depots. That's the weakest possible thing you could possibly do as an American president or any president. My God, any president would not do that. That's like just an appeasement move for your people so they don't get pissed off.
Well, dude, it's the whole radical left now that Biden sold out to is all coming back to haunt him now. That's what happens when you try to please everyone and you're not when you don't have any core principles and you just, go with the blowing wind.
Hey, nice job here, Mark. Check out this note from Heather.
Yeah, I'll be around.
That's awesome.
Yeah, I'll be around probably after 3 would be good. Yeah, all right. So anyway, here's our 10-year yield. And yeah, I mean, look, it's a very clearly defined range, right? Clearly defined range. Yeah, that's right. So 484 on the bottom, 5 on the top. Let's see what else we got to look at. I think McDonald's reported. It's 262. Yeah, so McDonald's is trading up here. So it looks like a little bit of a breakout. But it's just, I have a tough time thinking about taking long positions in equities, other than maybe in the energy sector, because it's just, I don't know, man. It just seems like at any given moment, things are going to spiral out of control. I'm surprised they haven't already, but I was thinking, with all these protests going on in the city, all these places around the world, man, let's prime terrorist targets, right?
I know. I mean, it's ridiculous.
All right, so here's natural gas. Now, we talked about this potentially, because it had this move that there just didn't seem to be a reason for it. Massive move. Here, let's see. So for whatever reason on Thursday, natural gas was up about 16%. But there was really no news driving it, or at least nothing that we could find. They always put stuff like this, natural gas rise as Egypt gas import stops, or natural gas is prices rise as natural or as export or as Egypt gas export stop. I mean, it could just be anything. They just feel as though they always need to have some kind of a story for every single move. And the reality is most moves are not driven by stories. They're just driven by technicals. So for something to go up this much, all the way up to here, so at the high, we're up 20%. So for something to have a 20% move in one day where there's no news driving it, it's an unsustainable move.
Right.
If there was news driving it, that would be different. But it's unsustainable. And as we can see, we've reversed. So we've gone from 365 down to 334. And I think this will probably continue to move lower. And I don't know, maybe 320 would be a target. So you can look at the cold ETF, the KOLD. This is designed to move in the opposite direction of natural gas. So if natural gas goes down, this is going to go up, and this uses leverage. So if natural gas goes down, say 1%, this is going to go up by, say, 2%. So I guess the moral to the story there is that if there's something makes a really big move and there's no news that could justify it. I mean, I'm not talking about something that moves like 1%. I mean, something moves 20%.
Yeah.
And if there's no news driving it, that's an unsustainable move. And a lot of those, like the Reddit stocks, when those things get jacked up, I mean, I don't really see it as much as we did like 2 years ago. But if something gets jacked up in some chat room on no news, just because some Reddit traders get hold of it, I mean, it's almost guaranteed money that it's going to come back. So hopefully it's something that trades options, like this Tupperware, right? Remember that this became the meme stock.
Yep.
And look at where it stalled out, right around 550, right? Support here, resistance here, support here. So it's almost better to just kind of ignore the news in a lot of ways, because it'll just, I know we go through this stuff, but Detroit is paying up to the NDAA strike. I know we go through it, but ultimately a lot of this stuff will really just kind of get you confused if you try to apply it to your trading.
And what Mark means by that is the news isn't what moves. He wants you to understand the technical analysis of the charts, not that the news does move stocks from time to time, but it'll be a move. It won't be a big giant move unless the move is unless the news is really, really good or something like that, or they beat earnings. But that's when you listen to the news. Most of the time he's wanting to teach you the chart, and that's what he's teaching you.
Look at this. Fallen crypto tycoon Du Quan was ready to get out of Montenegro, so I guess he disappeared.
Wow. Man, these crypto billionaires go away quick. They're like, that's a bad thing to get into.
Yeah, remember they found the dude in the Caribbean?
Yeah, the one guy got floated, and this guy's missing. Yeah,
probably ending up in a Chinese prison would not be a good way to spend the day, I would think. But anyway, all right, let's see what else is going on. Oh, Biden uses emergency powers to mitigate AI risks. Oh, great. That makes me feel
What does he know about a computer?
Remember when he said, put on the record player?
Yeah. I tell you what, I was watching a little something this morning with Byron Donaldson, or yeah, was it Byron Donaldson, Congressman Donaldson, and they were talking about some of his misgivings. And I don't know if you know this, but he's from Florida, but he was in the financial industry for 20 years before he got elected to Congress. He knows what he's talking about, and they still can't get Joe's banking records, but they're finally starting to get everybody else's. So they'll slow walk it to the election or close to the election, and then they'll impeach him, I'm sure. Or not him, but the Bidens will slow walk all the information out, and then by about the election, it'll come out, or after. Hopefully, they'll want it after, but hopefully, it'll come out before.
Yeah, but they're turning on him now. I mean, you got that Robert Kennedy is going in an independent, and then like some other governor, I think, just said that they're going to run. Like some Democratic governor said they're gonna run for the presidency. So that just goes to show you, man. It's when you got weak leadership.
Yeah.
There's a Grateful Dead song called "Ship of Fools," and that's what these people remind me of. They're all just fools, man. Lincoln and and who's the guy who writes the letter? Oh, the Middle East is the safest it's been in 20 years. Like 3 days before the thing blows up.
Well, the fact that they still pull this James Clapper out and bring him out and let him be a person to speak out in public after he did all these things with the FBI and all that stuff with Russia collusion and all these other things, and they're still using him as a mouthpiece. That guy's bad news. And there's a lot of people that they do that. They just, I don't know if it's just a misinformation propaganda campaign against the American people anymore.
Well, look at how wrong they were on everything. Clapper, Comey, it was just just the hatred.
Did you hear about the 40 informants that they've had for the Bidens for like 15, 20 years?
Yeah.
They've been paying them all this time, so the FBI knew it. So the question is, did the FBI use the Bidens to get rid of Trump because he got rid of Comey? And because he stopped the Clintons?
I don't know what's going on there, dude, but it sure seems pretty obvious.
It's crazy stuff, man. We don't live in that country.
I used to love when they used to say Trump wants to be a dictator,
right?
But he's also Putin's puppet. So it's like, which is it? Because generally dictators aren't anyone's puppet. No.
No.
All right. Anyway, let's just see what else is going on. And I'm feeling a little not very hot today. So hopefully I'll just go back to bed for an hour or so and sleep it off. SoFi stock pops as earnings loan volume surges. Let's see that. All right. Well, I mean, it's trading up, but again, we can see another example here. Look at where it's trading. So it's rallying on earnings. And look at that. See where it stalled out? Right. 741, right where this support was. So this is, and we can even take this back to here. I mean, it's a little more volatile than than some of the other stocks we look at, but you can still see it's pretty. Remember when he was going to call this? It was like the No Malarkey Express. It's like, who the hell even knows what malarkey is unless you're like 80 years old?
Right. Hey, I was asking you to look at Uber.
It's like when my wife buys mortadella. I'm like, it's like the only people that buy mortadella are you and people that are like 90 years old. I used to work in this deli, and it's like all the old Italian women will come in.
Yeah.
All right. So what do we got going on here? Well, I mean, I guess it's up a little bit, but it's only 40 cents. So I think you're still in a downtrend here. And I think there's a good chance it continues to go lower. So I'd be looking for support down around 37.25. See how it was resistance here with support there. So if I look back here, I just don't see anything that really sticks out like, tells me, all right, well, there's a good chance there's going to be support there. Now, remember, what we do is it's not a guarantee. It's just we got to play the odds. We're trying to stack the odds in our favor. But if you look at this chart, I mean, it's pretty obvious that 37.25 is an important level. It was resistance there. It was resistance there. It became support here. And now there's a good chance it's going to become support again.
And all it needs Starbucks.
So what happens is people that want to buy, they see it coming lower and they're just watching and waiting. It's like, all right, well, if it's trending lower, what's the point in buying it? We could just be patient and get a better price. But then when we get down to the level here, they're going to notice, gee, it's not going down anymore. That must mean there are new buyers coming into the market. So some of the buyers get anxious and they start to outbid each other. And you get this like snowball effect. And this is why sometimes you get a tradable rally coming off of support. So I don't think I would take a position yet, but if it got down to around here, that's where I would get interested.
He sees that gap there from 33 to 32. You would need to wait for it to break that support at 37.50 before that gap ever comes into play, Avi.
Yeah, so if this support breaks, then there's a good chance that our next stop would be down here. So because we had our fast move up. So my guess is it trends lower and then it finds some support around there, and then you just got to wait and see at that point. But if this support breaks, yeah, then I think you can get a pretty rapid move lower here because we got these gaps up. So one of the reasons why we saw where we get support is because you get these remorseful sellers trying to buy their shares back. If you gap through these levels, no one sold there because it never traded there. And then you have the fast move. So you're not going to have remorseful sellers trying to buy their shares back here. So there's a good chance that if it breaks this support, then there's a good chance it makes a rapid move lower to here. So you may want to just wait and be patient and wait to see if this support eventually breaks, and probably take a couple of weeks to get there, unless there's some news out. Let's see. Starbucks. $97.52. $92.57. I don't know. This one to me looks like it's kind of neutral, actually. Yeah, let's see where we are this morning. 92.57. So this is where we're trading this morning. Yeah, I don't know if this price level is that important anymore. See, it's kind of gotten traded through. Well, I mean, I guess I would just say if I was considering, I mean, I don't know. I don't want to force an answer. It just looks to me like it's kind of neutral. So for potential price levels that might come in play, I would go down to there, 91.30. And then I would probably go here too and true this up to there, 94.62. From this time horizon, let's look at a shorter term pattern here. Yeah, maybe I would consider buying it if we got above this 93.50 level here. See how I was support, and then it became resistance.
Mm-hmm.
But as of right now, it looks kind of just neutral to me. So I don't know if that was helpful or not, but I don't want to just guess. This is why sometimes it's okay to stay on the sidelines, right? It's you don't see anything, and so instead of forcing it, it's like you just watch. You just watch. Go for a walk. Sometimes I come up with some of my best ideas when I'm hiking with Clifford. So maybe shorter term, like day trader-ish. Well, actually, I'm sorry, I'm looking at the wrong scale here. So we're trading up about here this morning.
Mark Avi's asking you if that gap at 32 to 33 can act as support and resistance. On that would be back on Uber.
Well, the thing about gaps, right, is that we know that levels that were resistance tend to turn into support. See resistance. Then when the price goes higher, some of the people who bought regret their decision to buy, and they tell themselves, if I could buy this back at the same price I sold it at, I'm going to. So you get seller's remorse causes people who sold to go buy their shares back. And if there's enough of these remorseful sellers trying to buy their shares back, what was resistance can convert into support. Now, when you have a gap like this here, you actually have a series of gaps because there was no trading at these price levels. In other words, on this particular day, we closed here. On this day, we opened here. Then we closed here. Then we opened here. So in these gaps, there was no selling. So if no one sold, well, there was no trading. So if there's no trading, there could have been no one who sold. So you're not going to have these remorseful sellers trying to buy their shares back. So that means if we get back into this zone here, to these price ranges, there's a good chance that there's not going to be a lot of support. And that means if the sellers come in, they're going to have to knock the price down if they want to get their trades executed. So when you gap one way, when you gap up, if you come back the other way, there tends not to be a lot of support in that range in those ranges where you gap through. All right. So I hope that helps clear that up.
Mr. Softy.
Microsoft. Where's this 333? Yeah, I mean, this looks kind of neutral as well. I'm not seeing really sticks out to me here as potential trades. All right, I think I'm gonna get going because got to get ready for my 8:45.
All right, well, listen, everybody, have a wonderful day, and we should have the editing done, or the editing and the copying writing done by Wednesday morning, so you should be able to get the options with no delay. So thank you guys for showing up today. We appreciate you as usual, and have a blessed day. Mark?
Yeah, and just keep an eye on this 416 level for a SPY, because if we get there, we'll probably roll over and start to trend lower again.
And I made a graphic for you guys. We were talking about this in Mark's other class the other day, but I'd like you to take a look at this. So the dollar bill is 0.1 millimeter thickness, and the moon is 384,000 kilometers. So that's 384 trillion would take you to get there. So that's 5.5 times back and forth to the moon that we've got dollar bills stacked in the last 20 years of this budget that you. It's ridiculous to think about, man. Wow. So anyway, thanks, guys. Have a lovely day.
All right. We'll see y'all.